Hello, and welcome to the Solving Locally podcast. My name is Tracy Bolton, and I am your host. Today, we're going to be talking about the African Continental Free Trade Area, the AfCFTA, the world's largest free trade area, creating a single marketplace of 54 countries and 1.4 billion people. Today, my guest is Brigitte Harrington, the CEO of Igire Continental Trading Company, the first company to actually ship and sell products under the African Continental Free Trade Area. Brigitte, welcome to the show.
Thank you so much. It's such a pleasure to be here with you tonight.
Oh, thank you so much. That's right. Night, you're in Rwanda?
Oh, yeah,
Morning,
it's 7
afternoon
p.m.
is
here.
my time. Yes. Well, thank you for joining us. I am super excited to talk about the African Continental Free Trade Area. I've been hearing so much about it, reading so much about it as an economic game changer for Africa. But before we dive into conversation, I just want to give a brief definition of what a free trade area is and why I think it's important. So, a free trade area is an agreement between different countries that allows companies to sell their goods and products without incurring huge duty and tariffs. So, that's important because think of me. Let's say I'm a manufacturer of apparel, of clothes in Ghana. Now I have 54 other potential customers, clients that I can easily or more easily sell to. So that's a huge opportunity. As I mentioned, I think I've been reading a lot about all the huge opportunities that the African Continental Free Trade Area offers. So I just wanted to get your perspective. What is the big promise you see? Is it more jobs on the continent? Is it cheaper products and services, more access? What do you think is the big promise for the African Continental Free Trade Area?
That is a fantastic question because oftentimes I think people think about AfCFTA and they get a little bit confused because they get pigeonholed into one answer or another. But the promise of the Africa Continental Free Trade Area is economic freedom across the continent. And
Mm,
what I mean by that is if you look at what the role of Africa has been, the continent was used mainly as a source for raw materials. So everything that left here was in the form of raw materials. It was either oil, it was timber, it was cocoa, it was a number of raw materials. And those raw materials would leave here at pennies on the dollar, and they
mhm.
would go to either Europe, they would go to the United States, or they would go to the Caribbean for further processing. So when we talk about raw materials, there are a couple different lanes that we could go down. But in this particular case, I want to deal with just minerals. Let's talk about oil. Let's talk about coltan. Let's talk about wolframite. Let's talk about cocoa. Let's talk about timber. These are the raw materials that have value added to them
Mm,
in the countries that import them. And so
mhm.
by doing that, give you a case in point, and this is something current. Um, normally coffee, if you think about it, most coffee is not grown in the United States. It's not grown in Europe. It is grown in parts of South America. It's not grown necessarily in the Caribbean, a little bit. But what happens with coffee is when I first moved to Rwanda 7 years ago, the premium grade coffee was going for $4 a kilo.
Mhm.
Meanwhile, once that coffee had value added to it in the United States and in Europe, at that point the coffee was going for between 45 and
Okay.
$50 a kilo. In today's market, that coffee sells for technically somewhere about not 8.50 to $9 a kilo for the specialty coffee. A couple months ago, that same coffee sold at auction in the US for $85 a kilo. Now let
So,
that sink in. $85. The farmer is getting $8.50.
so do you see, so when you talk about value add, again, I'm trying to connect the dots here. So by having 54 countries, this huge marketplace, now you have more opportunities in your example with the coffee to add value locally versus having
Hmm.
to sell that raw material. So you can keep those raw materials within the continent, right? And then
Exactly.
add the value there, right? With
Exactly.
company.
And
But I guess what I don't understand with that is why. So, for example, in Rwanda, Rwanda grows coffee, right? Correct.
yes.
So, what prevented Rwanda from adding the value before the AfCFTA?
So before AfCFTA, nothing really prevented them from adding value, but the question became who was going to purchase that coffee?
Oh, I see.
There you
So
go.
now you
So
have
in
this
other
bigger
words,
market. Okay.
exactly. So in other words, you could add value here, but there again there were barriers even on the ground here. Number one,
Okay.
packaging materials are not produced necessarily on the African continent. In the last 5 to 10 years, that's changed.
Okay.
So if you're going to, let's say we're going to add value to coffee. If we add value to coffee, that means that we're roasting it,
Yeah,
and
I
then
get it.
we're grinding it, and then we're packaging it. So the roasting and the grinding can take place here because there are facilities that roast and grind. But then you have to have the packaging. There's no packaging that's manufactured here in Rwanda. So all of the packaging has to come from outside. Up
Okay.
until recently, the place where we all buy packaging from is
I get
China.
it. I get
It's
it.
either
I get it.
China or India. Now, in the last 5 to 10 years, there have been organizations that have sprung up primarily in Northern Africa and Southern Africa that
Okay.
produce coffee packaging materials.
I
And
get
those
it.
countries are South Africa, Morocco, and Egypt.
Okay, that it clicks now. I get it. So it's not just about adding value because there's a cost to it, right? To your point.
Mhm.
But so you have to have a market. You have to be able to sell it. And what the
Exactly.
AfCFTA is doing is giving you like a million times more places where you can sell that coffee. So I understand that. That makes perfect sense to me. So there's a promise when you're adding value, right? Then you're creating more economic value for the country, for the continent, and by not by definition, but by natural recourse, you're going to create more jobs, you're going to create cheaper products, you're going to create more diversity in your products. Okay. That makes sense for me. That makes sense. So there is a huge opportunity, right? For I
Oh,
think
yeah. There's
huge game
definitely a huge
changer.
opportunity for economic growth because what that does, for example, is in the case of where, let's say I buy coffee for $9 a kilo, right?
Hmm.
If I add value to that coffee, at best, I can look at selling it for about $45 a kilo wholesale. Now, what does that mean in the whole scheme of things? So, when we look at a country, we have to look at what's called the balance of trade. And
Hmm.
the balance of trade dictates what the value of your currency is in the world market. So, for example,
Mm.
if I'm in a landlocked country, like I am, Rwanda, and everything is imported, and there are very few things that are exported, and the things that are exported are in raw material format. So when we look at Rwanda and we say, okay, what are the products? What are the big products that are exported from here? Well, the first
Mhm.
one is coffee. The second one is tea. And when you look at both of those markets, primarily both of those products are exported in raw material format.
I
So that
understand.
means that when you look at the fact, let's say you import $100 million worth of products, but your exports are only $30 million worth of
I get it.
products. So what that does is it means that you are in a trade deficit position of $70 million. dollars. And when you take that and input it into the world currencies, then what you find is the value of this currency depreciates against the dollar, the euro, the pound sterling, and other world currencies. So
Oh,
let me give
okay.
you an example of what that means. When I moved here 7 years ago, there were 900 francs in a dollar. As
Hmm.
of today, there's 1,459 francs in a dollar. So if you look at that and you say, okay, 1450, let's say 1460 minus 900 is 560. Now,
Uh-huh.
560 divided by 900. So that means that the currency has depreciated by somewhere in the neighborhood of 65% in the
Okay.
last 7 years.
Okay. Okay. Okay.
So you're
Okay.
following me here,
I
right?
follow
So
you. There's so
yeah,
many little pathways for
exactly.
economic development that
Hmm.
this can propel. I get
Yes.
it. That makes perfect sense to me. So let's look at a bit about how this works, the mechanics of it. Let's say I have a
Okay.
company. I'm based in Nairobi, for example. I make these
Mhm.
clothes, right? So can I just say, oh, I'm going to sell under the AfCFTA, or what do I need to do to qualify to leverage that vehicle to have access to other countries in the continent as a company?
Okay, so there are a number of things that you have to take into consideration. One of the first things is called rules of origin.
Mm-hmm.
Now, what does that mean? It basically means that you cannot import something from China or from India or Vietnam into Nairobi and then try to sell it to Kigali or try to sell it in Tanzania or
Oh,
in
okay.
Rwanda
Okay.
as a wholly African owned product.
Mm,
So, under the rules of origin, those products would not qualify under AfCFTA
okay.
because the rules of origin state that whatever the product is, the majority of the content of that product must originate from Africa. It doesn't necessarily have to originate from, in the case of your clothes, it doesn't have to originate from Kenya. It could
I get
originate,
it. I
part
get
of the
it.
content can be from Tanzania, part of the content can be from Uganda, but it must be wholly owned African or the greatest percentage.
Is that 51%?
It's more than 51%.
Oh,
The
okay.
threshold
Oh,
is
I
way more
love
than
that. I
51%.
love that. I
And
love
let me
that.
tell you, let me make you laugh.
Make you
So a
laugh.
few years back, Tanzania decided that everybody in East Africa loves Tanzanian rice, right?
Hmm.
So Tanzania, let's just say 100,000 tons of rice. Well,
Hmm.
the demand was greater than 100,000 tons. So what Tanzania decided to do was let's import some rice from
I knew you were going
Vietnam
to
or
say
from
that.
Thailand, and then let's mix it all up. Let's throw away the bags. And then all
Uh-huh.
of a sudden they start exporting. All their exports grew from like 100,000 tons to almost 300,000 tons. And the numbers are fictional, but
Right.
but something
I
along
get
those
your
lines.
point. Yeah.
And then they were like, oh, okay, we could export this under AfCFTA. And then when it gets to the other country, then the other country will get reduced duty on it, which will make us competitive in that market.
I get
Now,
it.
here's where the rules of origin came in. It worked. It was working pretty well for a minute. And then somebody said, hello. No, 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 no.
So you got
You
those
didn't
checks and
produce
balances.
100,000. You only produced 100,000 tons. Meanwhile, you're trying to sell 250,000 tons under AfCFTA. So now let's go back and look at your operation and figure out where this
I
other
love that. You know,
150,000
I
tons.
used to be an auditor, so I love the whole concept of checks and balances
Mhm.
and making sure and testing. The thing that I'm hearing, what I'm understanding, it's a holistic system, right?
Yes,
So all
yes.
of those components were thought through. Your company was the first to ship under the AfCFTA. So Let's talk a bit about your experience, your journey, starting with how you ended up in your current role.
Okay, oh, that's a lot to unpack. So let's start with 7.5 years ago. 7.5 years ago, I was in the United States. I had moved back from Ghana after having been there for 10 years. And I received a phone call from a gentleman here who said that he had been referred to me and they were having issues with their farmers and the fact that they were basically making no money doing all of the heavy lifting. And at the same time, the product that they were sending as raw materials, somebody else in the United States and in Europe was making a killing.
Was it
And
coffee?
in the coffee, yes.
Okay. Okay.
And so, my question was, so what do you need me to do to help? What is it that you're calling me, asking me for? And he says, well, I think that we need capacity building. And so we talked about it. We went back and forth. And finally, we came to the resolution. I came to the resolution a couple of days later that what we need to do is we need to start a coffee company and this coffee company, the primary reason for its existence will be to add value and then to sell that product at a higher price. So I think it was May 10th, 2022, I started Ijiri Coffee.
Get out. And you were wait, and you first shipped under the AfCFTA in 2022. Wow.
Right. And so this is a testament to how good God is because 5 months to the day we shipped under AfCFTA, the Guided Trade Initiative. And so how that came about is a very interesting story because what I was doing was I was packing up coffee in suitcases and I would go to Nigeria and I would sell coffee. And then I would come back here and I would pack up some more suitcases and I would go to Ghana and I would sell coffee. And so I think that the term for that is smuggling. So I figured that at some point or another, somebody was going to come and arrest me somewhere. And what led to all of this was I had applied for an export license here in Rwanda, and they declined. They rejected my application and said, you have to tell us how you're going to sell at least one container load. Well, the only people selling container loads of coffee at that point were selling green coffee, i.e., raw materials.
Oh,
Meanwhile,
okay.
the government of Rwanda was saying we want people to add value to coffee and to tea, and but no one is buying a container load of value added coffee because that market hasn't existed. We have to develop and build that market.
Exactly. Yeah.
So this is how I got into smuggling. In the meantime, in I think it was August of that year, so that was what, 3 months later, I went to a friend of mine here and I said, I've been hearing about this thing called the AfCFTA, and I want to find out how I go about shipping under this because I want to be legal. I want this to be legitimate. So he said, oh, you need to call this person. So I called that individual who at the time was the Director General of the Ministry of Trade and Commerce here. And the gentleman
Mm.
told me, oh, I'm on leave. I'll be back in September. And I said, okay, so I guess I'll call you in September. He says, no, 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 no. Why don't you meet me next week and we'll play golf? And I said, you play golf? And he says, yes.
Oh my gosh,
Okay.
yeah.
So I get to the tee
The
box,
golf
speak to the
course.
guy.
I got to learn how to
Yes.
play, man. I'm
Everything
telling
goes
you.
back to golf with me. I get to the golf course and I'm like, it's you? And he said, yes, it's me. And I was like, okay. So over the next 18 holes, 4 hours, he says, are you ready? And I said, yes. He says, well, we have something called the Guided Trade Initiative of AfCFTA,
Mhm.
and Rhonda is participating. We've been looking for a company for the last 6 months that was ready to ship. Are you sure you're ready to ship? I said, not only am I sure I'm ready to ship, I know who I'm shipping to and I know the quantity that I'm shipping.
Mm.
So at that point, he said, okay, fine, I'm going to tie you into my staff at the office. This thing is already well underway. And so the next thing I know, I was in a conversation with that office. About 2 weeks later, I was on a call with about 68 people from all around the continent talking about the guided trade
Oh my
initiative.
gosh.
There were 8 countries involved initially, two from North Africa, two from West Africa, two from East Africa, two from South Africa. So, well, yeah, so it was eight. It was
Okay.
supposed to be 8 countries that were supposed to trade under this thing. And so the long and the short of it is, I had no idea that my company was going to be the first one to ship.
Wow.
It just,
Great omen though.
time came around October 3rd. I had already booked the cargo on October 3rd. 105 kilos of value added coffee left Rwanda on Rwanda Air at I think about 8:30, 9 o'clock in the morning and arrived in Ghana at 12:30.
I love that. And I've been to Rwanda a few times, as you know. I think I've mentioned this to you. And I have
Hmm.
just been so impressed with the ease, at least in my experience, with getting things done and getting access. That is something I've been really impressed with. Oh, so, whoa, that is a nice feather to have in your cap. So, being the first. So that was in 2022.
That was in 2022.
We're on the eve of 2026. So
Yes,
what have you seen in that evolution? I'm assuming that you've done other shipments, right? Under the
that's correct.
AfCFTA. So what positives have you seen in that trajectory over the 4 years now?
Yeah, so basically, and I would say a number of things have happened. One of the first things that happened is I started speaking at a lot of conferences. In addition to that, we were the first ones to import we were the first ones to import under AfCFTA in Rwanda. So
Mm,
we imported cocoa powder and coffee and chocolate bars,
hmm.
and we distribute those to the two major supermarket chains here, which is Simba and Sawa City.
Hmm.
In addition to that, so the first shipment, the first export shipment took place in October of 2022, and by December of 2022, we imported the first consignment of cocoa powder.
Okay.
There was a Women in Trade conference that was held in Dar es Salaam. And
Hmm.
at that conference, I was asked by the head of one of the senior managers at AfCFTA if I would start AfCFTA trading company. And
Mm.
at that time, there were only two other AfCFTA trading companies. There was one in Egypt and there was one in Ghana.
What does that mean?
So what that basically means is that was the birth of Ijiri Continental Trading Company.
N-
And that happened in April of 2024.
Well, I guess
So
my question is, do you need to be a trading company to trade under the AfCFTA? I don't understand.
no, you do
Yes,
not. But so there's the AfCFTA Secretariat,
right.
which is situated in Accra, Ghana,
Yes.
in the AfCFTA building. Now, those people are responsible for policy, for I would say communication with all of the governments,
Yeah.
and for basically assisting in the implementation of the agreement. So in sitting back and looking at what transpired under the Guided Trade Initiative, they determined that your typical average company is not going to be able to export under AfCFTA because there's a lot involved. First off, you have to have a customer on the other end.
Right.
Secondly, you have to understand what AfCFTA is, rules of origin,
Yeah.
what's required to be able
Okay.
to export. So in that particular instance, what they said was, you know what? We need to be able to find one company in each country to start off with that would be knowledgeable and that would have the wherewithal to be able to trade under the agreement. The other thing is, as I set out on the speaking engagement tour, as I'm going to call it, during 2023, one of the things that I kept highlighting and pointing out was the fact that your typical small business or micro-sized businesses, which probably is the equivalent about 94% of the businesses on the continent, would not be able to participate under AfCFTA. They don't have the wherewithal in terms of personnel, they don't have the knowledge or expertise, and they don't necessarily have the financial capacity to be able to go and look for business outside.
So,
So, therefore, a trading company would be able to take products from the
okay.
smaller companies,
Okay. I got it.
consolidate them together, find a market, find a buyer, and then be able to ship those products to
Oh,
that
okay.
buyer in that
Okay.
market.
Okay.
So the classic example of that is in April of 2024, I started the trading company with a minority partner here. In September of 2024, we shipped 900 kilograms of value added multiple products from multiple companies, 5 different companies, to Ghana. And those products were 2 brands of coffee. So it was Ijiri coffee, Pedro's coffee, Nikes honey, Rhonda Mountain tea, and it was, what's the other one? Avocado oil.
Okay, I get that. So that facilitates it for small companies like me, the manufacturer of
Mhm.
this, to be able to take advantage of the opportunities of that huge marketplace. And
Exactly.
so, just very briefly, does that you still do the trading companies have the vetting mechanism to make sure the product is of African origin? Do you handle all of that? Because one of the things I've read briefly from some small companies on the continent is it's a huge financial expense for them because of fees and qualifying, I guess. Can you talk a little bit about that? That's been some of the little posts that I've read. I don't know
Yeah.
the truth in that or what. So I'm just trying to get clarity on the ease of being able to ship
Okay.
under that with your
So when
trading
we
company,
talk,
for example.
yeah, so when we talk about, let's go back to rules of origin, for example.
Hmm.
And there are two approaches to rules of origin. Okay. And that's based on generally the size of the country and also the products that that country produces. So in the case of Rwanda, our primary products are coffee and tea. Now, when we talk about rules of origin and who determines the origination of those products, in the case of Rwanda, it's the National Agricultural Export Board.
Okay.
So, in essence, what happens is if you have coffee or you have tea, it would go, samples of that product would have to go to National Agricultural Export Board, and then they're
Okay.
going to produce 2 certificates. The first one they're going to produce is called a certificate of origin, and the second
Hmm.
one they're going to produce is called a certificate of quality. Now, the
Okay.
certificate of origin is basically going to say this tea came from this province in Rwanda, and we could trace it back.
Got it.
This coffee came from this area in Rwanda by this cooperative, and we could trace it back.
Okay.
So that's the original certificate of origin. Now, that's the first country. So your smaller countries that have very minimal amounts of, let's say, I don't want to call them raw materials, but products that are grown there.
Okay.
Then when you get to a larger economy like a Ghana or a Nigeria, what they have is they'll have, in Ghana, for example, they have something that's called the National Coordination, wait a minute, let me see, it's called the National Coordination Office on AfCFTA. Okay.
Okay.
Now, what that office in Ghana is responsible for, because there are so many different products there,
Hmm.
is they have a team of 4 individuals across the government. So they'll have somebody from the Ministry of Trade, the Ministry of Agriculture, they'll have somebody from Foreign Affairs, and then they'll have somebody from the National Coordination Office on AfCFTA. And they will actually go to your facility and they have guidelines where they want to know, okay, what are the inputs?
I
Where did they come
understand.
from? What is the percentage of the product coming from wherever it came from?
I understand.
And then they determine whether or not that product meets the rules of origin. And so they, once they've done their review, which generally takes about a week, then what happens is you will get a letter and it'll have one of three different results. Number one, you pass. Number two, what is it? They put a hold on it because you need to make some corrections. Or number
Okay.
three, it's completely rejected.
Okay.
So,
Understand.
classic example of that is one of the products I told you that we import is
Yeah.
chocolate. And that chocolate is made from cocoa that comes from Ghana, right? But in that chocolate, there are other products. So there's milk powder, there's
Sugar,
nuts,
maybe.
there's sugar, there's like a whole host of ingredients that goes into this. Well, most of the ingredients from the chocolate company come from Africa, with the exception of their organic milk powder. And the organic milk powder comes from Europe. So when the National Coordination Office went out to their facility, they ran tests on what is the percentage of milk powder that goes into each and every product.
I
And I
understand.
believe the answer that came back was less than 15%,
Okay.
which means that they passed,
I
which
understand.
allows them to be able to ship under the guise of AfCFTA, which means that, and so let's just talk about what that means. What it means is that when the product gets here in Rwanda, the duty on chocolate bars is 35%. Under AfCFTA, the duty is 12.5%.
Oh,
So it's a
wow. So,
different. So
yeah.
the objective is to make these products competitive with the products that are coming in from Europe and from America.
And I think those you have to have that, or else it's not going to achieve that big promise, right? You have to have
Exactly.
those checks and
Exactly.
balances in there, or else you're defeating the purpose, right?
Right.
So I think that's all good. So, what do you think potentially does this have an impact in the global trade arena? And if so, what do you think that is or could be? Right?
So it
Considering that
definitely,
balance, right? Of import to export, right?
definitely has an impact on global trade.
And
And
it makes
I think
Africa a player, does it not?
it does a whole lot more than make Africa a player. And
But
I think that the classic example right now, which is current news, is the fact that Aliko Dangote built an oil
yes,
refinery
yes, in
in
Nigeria, right?
Nigeria.
Yes, yes, yes.
Yes, that's processing 20 million barrels of oil a day, to the extent that not only are they able to supply all of Nigeria's needs, but they have capacity to be able to export to other countries. Now, why is this important?
Oh
It's
God.
important because the raw materials, which is crude oil, has been being shipped to Houston for the last God knows how long, since 1966, I believe it is.
Mm,
Now, when it got to Houston, Houston was adding value by refining and processing and doing upstream products and downstream products, and then sending those products back to Africa at a
li-
premium price. So
like you
now,
did your example with the coffee. It's the same,
exactly. So
right?
cut all of that out. Now, what's happening is, since Nigeria is able to supply the market that it's in, the price of gasoline has dropped. Now they're also producing jet fuel and other downstream and upstream items.
So
Now,
more revenue across the country. You're taking care of your own needs and making
mhm.
those prices more competitive. You're creating the jobs locally and you are building your market outside of your own country, the continent itself. So,
And you're strengthening your currency.
wow, that's important, right?
Mhm.
That is critically important.
But you have to understand that by strengthening your own currency, you're now assisting in the depreciation of somebody else's currency because now Houston is no longer getting oil at pennies on the barrel and now they're adding all of this and doing this and sending it back. There's no longer a market for that, which means that the industry in Houston is on the decline very quickly, which means that the economy of Houston could crash and burn, which could be a major problem in the overall health of the US economy.
Well, I think, it goes back to the one of the whole premises of capitalism and competition that you force folks to up their game, so to speak, right? Or figure out alternatives potentially. I mean, in theory, that's what they teach us in school anyway. But I love all of these different pathways for prosperity, right? I'm seeing
But let me
multiple
say something.
pathways. Yes,
In the
ma'am.
case of oil, you're not forcing anybody to up their game because if your entire business depending upon you importing this product very, very, very cheaply, inexpensively, so that you could add the value to it, make the money on it, if you're not getting the product at all,
Well,
now
it ups your
you've
gain
crashed your
and you
economy.
need diversification of your product or something you have to rethink from your business model perspective. That's kind of, I'm looking at it from that large extent, but absolutely. You got to look, okay, maybe this oil is not the game we can play in anymore. What's another game we can play in? Or we can't get it over here. Where can we get it? Or maybe we need to look into green energy, right? So that's what I
So,
mean.
so it's very interesting that you should bring that up.
Oh,
So
green
now,
energy?
now I'm no, not green energy. I'm going to
Oh,
take that someplace entirely different.
okay.
So
Okay. Okay.
On Christmas Day, the
Of this
United
year?
States, just a
Okay.
couple of days ago, the United States decided that they were going to bomb northern Nigeria.
Oh, God,
And the
yes.
question has to be why?
Ah,
And everything always goes back to natural resources and who controls them. And I'll
yes.
give you a case in point about coffee. So about 2 or 3 months ago, Uganda and Brazil entered into an agreement to ship coffee from Africa directly to Brazil for the processing of that coffee and what processing and packaging of that coffee. And so what that has done is it's now caused the price of coffee to go. And you should, if you go into the supermarkets, you'll be able to realize that there has been a significant increase in the price of coffee.
Yeah, they've been talking about it for a long, long time. And I'm not going to go into it in this conversation. We could talk another time. But there's a lot going on
Yeah.
in the U.S. with Africa right now. And you're right. Nigeria, before that, Venezuela, oil. I get it. Yes. I know the State Department issued their, what, for 2026 security, I want to say plan, for lack of a better word,
Mhm.
and Africa premiered. I mean, it wasn't prominently, but it was
Yeah,
more
it
than
was
it
prominently.
has in a lot, 3 paragraphs on that. And there's a lot going on there, right? And I think, China's restriction on their rare earths has brought attention more to Africa. So we're going to see a lot with that. For me, live on this side of the pond, I think the opportunities for those outside of the continent, from investment opportunities, I think this opens up a huge possibility as well because now you have the ease of 54 countries to sell your products, your goods, or services. So that's one of the things I'm looking at least on this side of the fence, is how this creates opportunities for direct foreign investment for companies that really want to be able to get a larger market on the continent with selling their goods and services. Understanding, of course, that they're not part of the AfCFTA, so they're going to pay their share of what they will. But I just wanted your thoughts on it as far as direct foreign investment opportunities for folks on this side.
Well, I think that there are a lot of opportunities for foreign direct investment, but the thing is that everything starts with relationships. Number one, creating and building relationships. Um, the biggest challenge that we have here on the continent, and I was talking to someone about this earlier, is the fact that we as small businesses, micro-sized businesses, and so on and so forth, do not have access to capital. In essence, what winds up happening is the businesses here are not growing nearly as fast as they could grow because we just don't have the access to the capital which would allow us to grow. So when I start talking about what does foreign direct investment looks like, it looks like either I don't want to say GoFundMe or anything like that, but it looks like figuring out an avenue whereby the risk can be minimized across the board for people that are interested in perhaps investing in small companies in Africa. And what it might look like is it might look like either a fund or a pool of people with a number of companies that are saying, okay, this is our portfolio, this is who we are, this is what we've been able to do in this period of time, this is how much money we need. Because in most cases, you're talking about businesses that need between probably $20,000 and $500,000. When you go to some of the international banks, they'll tell you straight out, like AfCFTA Bank, oh, we don't look at anything under $5 million. So I think that when we talk about foreign direct investment, what we need to look at is we need to look at how do we structure something so that the small businesses that need access to capital can have it.
And I think you hit on it because, as you mentioned before, 94% of the businesses are small to medium size, right?
No,
So you
micro to small, not even
micro
small to medium. Hmm.
micro to small. So you have to figure out how to structure a deal because the opportunity is there. It's just
Hmm.
not there at the $5 million level for one
Exactly.
company, but it doesn't mean it's not there at the $5 million level, right? So you
Exactly.
need to rethink and figure out how do I structure this to meet that 94%. So huge, at least in my opinion, opportunity, but it's for the smart investor and it's for
Exactly.
the patient investor as well.
Well, here's the thing. We don't have anything structured to be able to get it from whatever the small investor is. Let's say you have an investor that says, I have $1,000. So if I had 100 investors that had $1,000, then how do I put all of that money together to be able to then give it to a company so that they would be able to operate and grow, with the risk being minimized for each one of the investors? So, if we're talking $100,000 and each investor contributes $1,000, so your total risk is $1,000.
I understand.
But
Diversify
then
that
how do
risk.
I get it to the business that needs it?
And I think it's twofold, right? As we wind down, I think it's that smart investor, that creative investor, and also building that awareness, right?
Hmm.
Kind of what you're doing around the AfCFTA, but around these opportunities and around these needs. I know I spoke with a gentleman actually maybe 4 or 5 months ago based in South Africa that's reimagining venture capital specifically for the African continent, which is different from the US or
Right.
European continent, right? In the venture capital space. So, what's your vision for the next 5, 10 years for the African continental free trade area? What's your vision? Where do you see it going? We have this conversation in 5 years. What's going to look different? And when we talked about earlier that promise, do you think there will have been some inroads into materializing that promise, be it more jobs, currency?
So things are moving forward. They're not
Hmm.
moving as fast as they could move. Again,
Because,
access to capital.
okay.
And then also awareness.
Hmm.
So what's happening now? Because when you talk about AfCFTA and trade, it's not all trades are not the same because you're talking about cross-border traders, which are women that walk back and forth across the border every day with things on their head. Could be fruit, could be vegetables, could be clothes, could be eggs, could be a number of things. And they
Hmm.
literally cross the border into the other side, into the other country. They sell their wares and they come back.
Okay.
So that's one type of trader. Then you've got the huge trader that doesn't need any assistance from anybody. And then you've got the micro size and the small trader. Now your micro size trader is really going to have an issue trying to sell any product outside of the area that they're in because they don't have access to that market. And that's where the trading companies come in. Because what the
Okay.
trading companies do is they're able to purchase products from those companies, small quantities, and in the case of Rwanda, we have special rates with Rwanda Air. So in the countries that are AfCFTA countries, I can ship, for example, Ghana. There's a flight to Ghana 3 times a week. So I could take a small quantity of product from a company, put it on our e-commerce platform, and then let's say in a month's time or in 3 weeks' time, now the product has declined. I can go back to that manufacturer and say, okay, I need this many more products. So I'm not shoving it down their throats because, again, the micro size and the small companies can't ship a container load of anything.
So, what's your vision for what do you see in 5 years?
Five
Or your
years, I
hope?
see
Hope.
caps working in all
Okay.
countries.
So, the Pan African payment settlement
Pan-African
system?
payment settlement system. I see that up, functional, and actually working every day in
Hmm.
each of the 54 countries. I see trading companies. I see at least one in each country or more.
Hmm.
And I see the knowledge, idea, and experience of AfCFTA coming to fruition, which will allow people a better understanding of what the agreement is and how it works, and also give them access to getting into another market, either through a AfCFTA trading company or another type of company that trades.
And so, very briefly, do you see on that promise, how is that promise manifesting itself in 5 years? Is it through more job creation, cheaper prices? How do you see it in 5 years delivering on that promise?
Um, so job creation is number one. I also
Hmm.
see currencies being strengthened.
Okay.
Um, One of the challenges that I think that in 5 years that they will have started and be knee deep in mitigating is transportation because
Oh,
that is one of the biggest issues right now. How
yes.
do I get product from here to Ghana, for example? That transportation costs me twice as much as the same product coming from Europe
Okay.
in
I get
terms of
it.
the
Yeah.
freight charges. So I
Yes.
see all of these things finally, them coming up with a solution as to how do we get product from here to Burkina Faso, for example. There are rail systems that are being built.
Yes.
We need to look at how we're going to get either a fleet or a small number of ships that are able to sell around the continent to be able to pick up product and deliver product on the continent in a more efficient and also, I would say, less expensive manner.
Okay. Thank you. So we're at time, but before we close, I like to summarize something that you're optimistic about, something you want to share that's really popping on the continent. I'll do the same. If you don't mind, I'll go first and leave you with the last word. So, in my brain, all roads are leading to Africa, right? You just can't argue it. Minerals, rare earth, 30% are on the continent. The youngest population on in the world by 2050, 1 in 4 people on earth will be African. So talk about workforce, expertise. These are things you cannot ignore. And if you do so at your own peril. So I am super excited about the African Continental Free Trade Area and what it's doing. So my question to you, very briefly, as a member of the African diaspora, what can we do? What can I do to support? I know what I'm currently doing, but how can folks on this side make an impact or begin to work to make an impact to help with Africa's economic prosperity?
Wow.
Like, what
That
can
is,
the average person that's interested watching this is motivated, inspired? Sometimes I just recommend to people take a trip. It's not rocket science. It's not hard to do. It's not terribly expensive. Go see for yourself. I'm just, as someone living there, particularly because you have the lens as an American, what are some things you think that folks watching this might be able to do or think about?
let's start with think about.
Okay.
I look at, and this is the way I've always looked at Africa and the diaspora. The continent has the natural resources. And for the most part, those of us diasporans that grew up either in Europe or in the US or even in Canada, we have the education and we have the expertise. So if we are able to take our education and expertise and marry it with the natural resources and the people on the continent, then what that does is it creates a very, very powerful partnership. Because what that allows us to do is to really be able to take products, transform those products, and turn them into something that are exportable and that are usable. By doing that, then what it does is it allows for the education of people and the employment of more people on the continent,
Mm,
primarily the youth. Because if you look at the continent, the median age, I believe the last time I checked was 19.
yeah.
So if you take into consideration that 75% of the population is under the age of 19, that tells you that something is going on. This is the youngest population on earth. And what we need to be able to do is we need to be able to not only inspire them, but we need to be able to train them, give them skills, and give them a future that they can look into where they are able to support themselves and their elderly parents and grandparents. So I think the best thing that we could do is if you have an opportunity, if you have the funds, take a trip. Keep
Mm.
your eyes open. Don't go during Christmas to have party time, which is what a lot of people do. Secondly, if
Hmm.
you have a little bit of money laying around and you're thinking, okay, well, I'm not going anywhere, but I could contribute maybe $50 a week or $50 a month or whatever, then what we need to do is to figure out how to put some funds together so that we can start looking at, okay, what do we need in this country, this country, this country? Who are the entrepreneurs? What are they doing? How do we fund them? Because there's a lot of money that goes into tech, and tech
Yeah.
is great. But at the end of the day, The biggest thing that we're going to be looking at in the next 20 to 50 years is going to be food. And so
Mm,
we need to be able to start looking at, okay, how do we grow more food? How do we add value to those to the food that we're growing? And then how do we distribute those products?
okay, so it starts with at the base of those
Mhm.
Maslow's pyramid hierarchy of need.
Yep.
Get folks the nourishments they need so you can harness that energy because
Yeah.
19-year-olds, they're not afraid. They want to try and do everything. And so we really want to be able or to harness that creative, that inventive energy to propel to that level of prosperity
And
and equitable prosperity.
sometimes it's not even creative or inventive. It's just farming.
Farming can be creative. I
We
think
need
it
to
can be
eat.
creative.
Everybody needs to eat. And
This is true.
as we look around, not even the continent, but the world, we're starting to see these food deserts. Even in the U.S., we have food
Oh, I
deserts.
grew up in a food desert, south side of
Yeah,
Chicago. I grew up in a food desert, right? So, I mean, we had our grocery stores, but you didn't have a lot of options on where you could shop.
exactly.
Yeah. Well, this has been great. I have learned so much more, and I am still so excited, so encouraged, so motivated about what's going on with the African Continental Free Trade Area. So, thank you so much for sharing. I
No
appreciate
problem.
it so much. And
Thank you.
you have a safe, happy, prosperous, healthy, joyous 2026. And
I hope
goodbye,
that
everyone.
you do the same.
Thank
Okay.
you. Bye
Take
bye.
care.